Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's best stock picks, and have no idea why I do that every day. It is Thursday morning, August 20th, 2020. The Fed threw a little bit of a wrench in the market yesterday, but look, let's face it, it's overdue. If you're an experienced trader right now, you're probably banging your head against the wall saying, I don't understand people who are not looking at their account for the last 6 months, or let's say from the March bottom, who were all complaining about that they lost money, but had no idea how they made that money in the first place because they don't look at their 401k. Those are the people making the most money right now as active trade, as people in the market, because they didn't touch it. The SPY crawled its way all the way back to a new all-time high. Saw some selling yesterday afternoon. The Fed minutes came out and essentially killed the market for about an hour, roughly 15 minutes of selling, which again, 15 minutes of selling is a big deal in the market right now. It's the size of the moves that appear to be big, but the volatility has been contracted so much where if you looked at a chart of the SPY, the SPY ETF back in April, it was moving in dollar increments like that. Now it's moving in 20-cent increments. So 1/5 the amount of movement, and it appears to be a monster move, but it's really not yet. Look, let's face it. Active traders right now are used to trading the ebb and flow and back and forth in the market. And if you're trying to do that right now, you are probably a little frustrated. I could flat out tell you it's been a bizarre August of trading. Just keep floating to new highs on no volume, finishing the day for the most part in the ETFs with what I call indecision candles, maybe call them doji type candlesticks, where it opens and closes in basically the same spot on light volume, which is basically making the indices worthless to follow right now. The Dow is showing divergence, meaning it's not punching through the same way that the S&P and the NASDAQ did, and that typically leads to a reversal. At the very least, it stops the move to the upside in this case. But again, we're not in a normal market. We are not in a market where we're just trading off of news and earnings announcements and upgrades and downgrades. And we're trading in the middle of a pandemic that is stuffed full of stimulus package. So it's going to be interesting to see what happens as this package wears itself out and see what goes on. But we do have some trading opportunities today in a normal market. The last 2 weeks of August are typically the toughest or slowest 2 weeks of the entire year, quite honestly, even slower than last week of December. And it, for normal reasons, everybody who has families is either, they're going on vacation, coming back and looking to gear up after Labor Day again. But obviously nobody's going on vacation right now. But that hasn't stopped the volume from really drying up. And a lot of the major players in the market, meaning the market leaders, other than Apple, who has a stock split in a couple of weeks, they're just kind of dancing around in trading ranges. So we're going to do something that I normally do, which is go through what we might consider the market leaders. I'm going to take a quick look at the stocks that I typically trade every day. Some of them go in, go out. They're all in my list every day, but not necessarily trading them every day. It depends on the setup, depends on the order flow, it depends how the tape reading analysis goes. And then we do have a few opportunities. But first, we're going to take a look at NVDA, which reported earnings after the close last night, and we'll see that. But if you're new to the channel, absolutely click down and subscribe. We give education and trade ideas every day, and especially if you're having some success with the trade ideas, let me know. I'd love to share in your success. I'd love to celebrate your success, actually. And if you'd like to trade live with me for the next 30 days, definitely click down and learn about the boot camp. I'd love to see you in the community. So let's actually go over to the charts. We'll take a look. We'll start with NVIDIA. And the stock has just been ripping. Finally, saw 2 days of indecision, and now the stock is down almost $7 after earnings. Honestly, not a big deal. I mean, if you take a look at the longer picture here, this is where NVIDIA is. It's profit taking at all-time highs heading into earnings. So it's not like we have to panic that they didn't explode to the upside like a few stocks. And getting a lot of questions about carrying overnight into earnings, and I've been giving the same answer to everybody in the boot camp this whole earnings season. Is I'm not doing it. Earnings have been so hit or miss, where stocks are reporting good, trading down, and then you get stocks on the other side like SE, which hasn't made a penny yet. Has not made a penny yet, and the stock exploded. I think it was 20-something% the day after earnings. So it's earnings season is just not making a heck of a lot of sense in the traditional sense right now. So I'm being smart, and if it doesn't match the model of how I look at the market, I'm just dialing it back, and I'm not holding overnight into any earnings overnight. We do have some swing trades, but not earnings overnight. So setting up some trades. The one stock that was just an absolute rock star yesterday, which just out of nowhere, not out of nowhere, it did have earnings. What I mean is, it doesn't normally do what it did yesterday. And just to give you some context, let's go to the 15-minute chart. Whether you're a day trader or not doesn't make a difference. But after the open, which let's say was around 148.50, the stock still traded another $6 higher after the monster gap. So this is a big move for this stock. It normally doesn't move that far, that fast, and follow through. And it closed near the highs in a market that was otherwise lethargic and got hit hard. And you can see, just to give you like a little bit of context, you can see here, this is what Target did. And take a look at what the SPY did in that same time period. So just bam, relative strength in the market. This stock just held up like a brick. And we actually called out a trade in Lennar. I want to go back to the daily chart just to give you the significance of what I just showed you. Right here in Lennar was a day that the market actually did pull back and came back hard, for lack of, hard is relative, but Lennar actually closed on the highs that day, and we said, oh, wow, that's different. So day-to-day relative strength matters too, and you can see that Lennar actually traded pretty strongly over the next week or so. It's kind of, this is a good example here of the melted candles we're talking about, where there's just indecision. And if you know candlestick charts, you got the big body of the candlestick. A melted candle is where there's no body, and you can tell quickly that indecision happened, and it's really hard to make to give analysis when that happens, unless a melted candle happens after momentum, which you can see here in DocuSign, where we actually traded to the upside. Melted candles cause a reversal, and then another melted candle caused another reversal. So after momentum is when melted candles matter. So other than Target and NVDA today, one that I don't normally trade, but is certainly starting to look like something I would consider for a swing trade. Groupon had this monster gap. We said, not yet. Let's let it pause, see if it's going to hold the gap. And it did. It actually went sideways for about 5 days and is following through again. So I don't necessarily want to trade it today because of what it's done. It's gone $6 in 2 days, which is obviously a big move for that stock. However, let's keep it in the list looking for the next trade. That's a big deal there. Nike, which was also in the list yesterday, we said, watch it. It's at all-time highs. You can see that we punched through those levels. This is the pattern that I just absolutely love. Call it whatever you want to call it. I call it a pause. Punched up and paused, stayed above what was previous all-time highs, and still looks good. I'm looking to still be long this stock, looking to initiate a new trade. Look, if the market pulls back, which it looks like it's going to do on the open, and the stock pulls back, just know what your trade management is before the trade. We had a similar trade in Caterpillar last week that punched through, didn't hold, you get out. No big deal. It happens. It's a part of trading, right? MCHP, again, one that I haven't traded in a while, did have a really nice day, but you can see very clearly, right, momentum in a melted candle. What I do like is the fact that it got above this 108 breakout level, so it looks like it's going to open up kind of flat there. If we open up above 108, I'm going to start to look to initiate a day trade. If it holds above 108 and closes strong, I'm going to be looking to initiate a new swing trade above that level. JD is one that we're looking to book profits if it does open flat. It's going to open a little bit low, but if it opens and pushes higher on a swing trade, looking to exit into that. Again, if you know my mental model, I'm looking for the next 3 to 5 days, and this is a really solid profit, all things considered, in the market right now. And the last two I'm going to take a look at is Run and VSLR. VSLR. Both have similar patterns, both sitting at the top of these 2-week consolidations, but these are patterns that you can't give up on just because they haven't triggered yet. You need to set alerts. You need to be on top of these stocks because these are the ones you're like, oh gosh, I missed. Why did I miss it? It's just something as simple as setting the alert. So have your alert set. I do want to cover some of the stocks that are what you might call popular. And you can see Apple is starting to get a little toppy here with melted candles 3 out of the last 5 days, which shows a little bit of indecision. Keeps making all-time highs. Keeps lighting up the screen on my intraday patterns that shows the new highs. It's absolutely 100% still along. It's just not showing momentum like you would see where you look for this kind of stuff here. But the interesting ones, let's take a look at Microsoft. You can see the Microsoft and probably drill it home even more on the weekly chart. You can see that there's 1, 2, 3, 4, 5 weeks of indecision right now. And a lot of people asking me, is it tradable? Yeah, it's definitely long, but I don't like it until it's over 216 because it's choppy right now. Where's the edge? It hasn't really given you an edge in 5 weeks. Facebook gave us that one amazing, amazing day over here where it was up $18. We were all over it in the community. And look at this now. Hopefully you're learning to train your eye to see melted candles. 1, 2, 3, 4, 5, 6, 7 consecutive melted candles. 7 days of indecision. Seeing something very similar in Disney, although Disney actually did finally break down a little bit yesterday. I do like Disney as a swing trade. If we actually have one more push down in Disney, this was the gap from earnings. One more day down where we finally get a little bit of profit taking after earnings, maybe pull back with the rest of the market. Look for this to bottom out and then eventually make a run at this 133. I actually do like it above that level. Starting the position on this pullback and then adding over 133. I want to make that clear. I just want to touch on the financials very briefly. These stocks, they just can't get out of their own way. If we go to the weekly chart here, it'll really drill it home. Look at that. Absolutely no edge whatsoever. JP Morgan as well. From one day to the next, they look strong, and then they just absolutely fall out of bed. If we go to the daily chart here, right here. So this is what we keep talking about with very similar setup in Boeing, where it looks like it's ready to explode, but we say it's only one day. Relax, it's only one day. You can't trade these stocks with conviction. You look to the left, it's a mess for weeks and months, and one day of price action. You can definitely trade it for one day, but it's hard to have conviction. And those are the days you really have to work your orders and massage the entries and exits because it's not obvious. And Boeing is a great example of that. We keep getting, oh, I can't wait to trade Boeing, can't wait to trade Boeing. But this is what it's been doing. The volume is still tremendous, but it's just, it breaks out and goes into a funk, breaks out and pulls back for 4 days. I love to trade this stock. It's just very frustrating the way it's trading right now. So I'm staying away from it. Frustrating in the sense that it's not setting up perfectly, but as a professional, you just sit back and you don't do anything. So that's where we are right now. We have a tight list looking for breakouts. We're really kind of in money management mode right now, where it looks like we're going to open lower, push lower, and if you have some stocks that were weak yesterday but are strong overall, look for a test of yesterday's low to bid for those stocks. That's usually the best spot to find a lower risk entry that's clearly manageable in the direction of the bigger picture. So those will be the stocks we'll be looking at today too. Have a great day, everybody. I'll speak to you soon.